In this video, traders, we are going to look at how can I time the market to ensure profitability in trading. Hey guys, warm welcome to you. If you're subscribed to the channel, welcome back. If you're new here, welcome aboard. Okay, so how do I time the market to ensure profitability in trading? Well, first of all, this question, and by the way, if you're a subscriber, you know this already, this question is the wrong question to ask. You cannot ensure anything in trading. You cannot ensure profitability. The question is the wrong angle to look at things. And this might be brutal for some people. You might be about to go, X, I'm going to click off and find something else. But it can be 4 minutes and I'll explain to you why. You need to reframe your thinking. We cannot ensure anything in the market. We cannot guarantee profitability. If we could ensure profitability, if we could guarantee profitability, we would have massive amounts of money, would be fully leveraged up, and we'd just be piling it in and we'd all be gazillionaires within 10 days of trading. It doesn't work like that. We have two things that we're looking for. We're looking for our percentage win rate, and we're looking for our risk to reward ratio. Those are the two things. Let's scrub that off because we can't ensure. Those are the two things that we can control or that we can adjust and that we can look to gain. So if we have a trading strategy with a 50% win rate, but it's got a 10-to-1 risk reward ratio, in other words, we risk 1, we make 10, we will take that bet all day, every day. Do we know that the next trade is going to be a profitable trade? No, we don't. 50% could be a coin toss, right? I said to you, hey, heads, you win a tenner, tails, you lose a pound. What are you going to say? You're going to say, let's play the game. Let's play as many times as we can. Let's spin that coin, flip that coin, toss that coin as many times as we can, because you know that over the long period of time when you're playing the game, you are going to make money. You might have 10 tails in a row. Was it 10 tails you lost? You might lose 10 times in a row, whatever that was. You might be down 10 quid. You might be down 10 pounds, but you know, hey, my risk reward ratio is massive and my odds of success are 50-50. That's going to work out for me. You can't ensure profitability. You can't time the market to ensure it. So that is one thing you can do. The other thing you can do is you can adjust the scale the other way. You can say, well, actually, you know what? I've got a 90% chance of success, but the payoff is, say, 2-to-1. Yeah, I'm using extremes here, but you get the idea. Or you go to the other side of the coin and go, yeah, it's a 10% chance of success, but the payoff is 50-to-1. That's how traders make their money. And these are extreme examples, guys, but you get the idea. If you've got a 10% chance of success, but every time you do win, you win 50 times your money, the mathematicians out there of you are going to see straight away that that's a positive expectancy, but you play it. But for those of you who aren't, we can just see it. Look, we're going to win 1 out of 10 times, but we're going to win £50 every time we win. We're going to win 90% of the time, we're going to double our money every time we do it. These are positive expectancies. If these changed to, say, 50% of the time we win, but then we only had, a 1.5-to-1, we can see that that's no good for us because we're not going to make enough money. Or if we win 10% of the time and it goes down and it's a 2-to-1, again, that's no good for us. So it's about finding an edge in the market. So that brings us to what is our edge. Okay, if we've said to ourselves that our edge is having our win rate, our risk reward ratio, and combining those into a profitable expectancy, what might that look like in a market? Now that's up to you to find in your trading strategy. But examples could be, hey, in the last 5 years or so, if you buy every oversold condition on the RSI on a daily chart on S&P 500, you are going to make money. If you had bought every crossover of the slow period, 5 period moving average crossing over up over a 20 period moving average on a specific stock that's been in the bull market for the last 5 years, you're probably going to have made money. I'm bringing this off the top of my head. The point is that there are edges out there to be found. They're not hard to find. The key to trading is to know when to use the edge, when to stop using it, when to use a different edge, when to use a different strategy. You try and use that edge in a downtrending market, you're going to get hammered. Try using that in a range bound market, the moving average crossover one, maybe not the RSI one, you're going to get hammered. The point is there's always going to be a profitable strategy out there. You need to know when to use it, how to use it, and most importantly, and this is why we keep our money and don't give it all away, is the risk management. It's not about ensuring profitability. It's ensuring that you're in the game long enough for these numbers to work out. So if you have got an edge, it's got a slight edge, it's got a decent expectancy, it's got a decent risk reward ratio, you need to be not staking your full net worth on this, because you could 10% of those are going to lose. You could lose straight away. Or even you put 10% of your net worth on this, you had 10 losers in a row, you're going to wipe out. It's about the right amount of capital into the right trade at the right time. Get those three things right, and then over time, the edge will play out. Over time, you'll see the results. And I know that it's tempting to think, okay, if I can just ensure that the next trade is profitable, if I can just wait for the next trade to be the right trade. But I promise you, reframing that will help your trading massively. This is not a video about discipline. This is not a video about mindset. Lots of other videos on the channel to look at on that, but we can't talk about this without touching on it briefly. If you think like this, not only is this not possible, but it's also putting you in a negative frame of mind, because even if you think you've got all your ducks lined up in a row and you're pulling the trigger and you lose money, you're going to be frustrated, you're going to be disappointed, you're going to put too much weight on that one trade, all the things we don't want to do. Get rid of this question and reframe it. Reframe it and say, how can I build a strategy that's got a good risk to reward ratio, a decent expectancy, and how can I plug in a good risk management plan into that strategy to ensure that I'm trading it for a long enough period of time for it to actually work and to pay me out? That is the better question. It's not as concise as that, but you get the point. The idea is that's exactly what we're looking for. So if you want strategy ideas, guys, I've got some on the channel. Go look through them. Not saying that they're all going to work in every single market condition, but they might give you an idea on something you could use or utilize or start as a foundation to build your own trading strategy from. All right, guys, hope that's helped. That's never going to happen. You know the score now. Good trading. See you in the next one. Bye.